Hi, this is Dan Stewart, and this is your NORAM Asset Management Market Update, Friday, January 7th, 2011. Well, the markets were weak again today, and the Dow and the S&P were down marginally, and the NASDAQ was down 0.25%. Gold and silver were also down marginally, and the commodities were negative. The only thing that was up today were bonds. We're going to get a short-term pop in bond prices and yields are going to come down. The long-term trend is definitely up and very dangerous, but you're going to get an opportunity to get rid of the rest of your U.S. bond portfolio probably over the next couple of weeks. You see, Europe is in deep trouble. I've been saying this all along. Watch Europe and Japan. They're the wild cards. But Europe is in dire straits, and some of the countries over there are doing things that are outside the realm of common decency. The governments over there are doing anything they can to kick the can down the road and keep things going. Their debt loads are unsustainable, and they're looking at the private sector for a bailout. Now there's a joke. Instead of just printing more money, now they're looking elsewhere. We'll talk about that more next week, but keep an eye on Europe. I've been saying that for the last couple of weeks. Europe is going to give you the opportunity to get rid of your U.S. bonds. You should have sold off any emerging market debt and European debt a while ago. Their yields are soaring and will continue to do so. Their stock markets were also down across the board, and Asia was mixed. Although India was down almost 2.5% because they're having skyrocketing inflation and soaring food prices. India is one of the first countries on the planet to really realize the true wrath of the inflation that's about to come. What does this mean for you? Right now our U.S. equity markets are in a short-term pullback. The midterm trend is still intact. But the mid-cap and small cap are showing weakness, and that's usually the first things to sell off the most. And then last is the large cap, the big blue chips. Then when it starts to turn the corner and go back positive, the small and mid-cap generally lead the way, and then the Dow will follow. But in any event, hold on to any cash you have right now. Don't be using extra cash. Let this market bottom out, and then look for commodity-related companies. And if you haven't already gotten your precious metals, you need to get some precious metals, some silver and gold. Like I said before, stocks are still going to be good for the midterm. By midterm, I mean a few months. But we're not in a long-term bull market. Don't kid yourself. A lot of this recovery, well, virtually most of it, has been fabricated by the governments. Now it's coming home to roost, and all we have to show for it is a mountain more of debt. This has been Dan Stewart for your NORAM Asset Management Market Update.